Good afternoon. This is Josh Minzlin here at Chaikin Analytics, and I'd like to welcome you to our presentation of Trade Options Like an Expert, Secrets to High Profit Option Strategies. Presenting today is Marc Chaikin, founder and CEO of Chaikin Analytics. Chaikin Analytics is not registered as a broker-dealer or investment advisor either with the U.S. Securities and Exchange Commission or with any state securities regulatory authority. Chaikin Analytics is good for educational purposes only and is not a trade advisory service. Past results of any trading system or methodology do not guarantee future results. As a reminder, this webinar is being recorded and a copy will be sent to all registrants. Please submit any questions you have via the Zoom Q&A window, which you can access in the upper left-hand corner of your screen. To get started, well, before we get started, we have a special guest with us today, the founder of BigTrends.com, Price Headley. Price founded BigTrends.com to provide investors with real-time stock and option strategies and investment education. To get us started, here's Price.
Oh, well, thanks, Josh, and good afternoon, everybody. It is my great pleasure to introduce Marc Chaikin. Talk about a legend on Wall Street. I've been trading for almost 3 decades. Marc's been trading about twice as long. As after 40 years on Wall Street as a trader, stockbroker, analyst, head of options department for a major brokerage, you name it, kind of cover the bases. He founded Chaikin Analytics, which really gives you proven stock analytics for whether you're an investor or a trader. And it really keys on this Chaikin power gauge. This is a 20-factor alpha model, but what that essentially means is you get a green light for go on some bullish stocks, red light, watch out below. And Marc will show you a number of examples today, I know, of how that works. And what I really love is that Marc puts his money where his power gauge is. He has Chaikin Investments, which is collaborate with Nasdaq and Index IQ, which brings the Chaikin power gauge into an ETF tradable vehicle, and this vehicle, these Chaikin indexes from the Nasdaq have actually outperformed their benchmarks since inception, since April 2014. So you talk about really where the rubber meets the road. I can't be more excited to say, Marc, I can't wait to see what you have to share with us today. I always learn something new from you, and it's just a pleasure to say welcome today.
Price, thank you very much and welcome everybody. And I really appreciate your turning out so much of the Big Trends community for today's webinar. We're going to talk about trading options like an expert, and the real secret to high profit option strategies is having a directional edge. And I'm going to show you how we provide that and draw upon 5 years my experience heading an options department in the late 70s and early 80s for a major brokerage firm. I've been on Wall Street, as Price said, for 50 years, and for 45 years I've been using technical analysis, but always in conjunction with fundamentals. I hosted a webinar for Price on Tuesday night, and I got to tell you, he's about as good a technician as I've ever seen, and he shared a very discipline strategy. We're also about discipline, but our discipline incorporates fundamentals, so you get the big picture. I know Price understands that quite well because he's a chartered financial analyst, which means he's mastered all the ins and outs of fundamental analysis. And we both believe that some combination of fundamentals and technicals really does give you an edge. And I learned that very important lesson early on in my career. It helps you survive bear markets. It helps you point your strategies in the right direction, and it keeps you nimble because you can trade the long and the short side with confidence. So from my point of view, I've been mentored by some of the smartest and most successful institutional investors. Some of them were colleagues, some of them were clients, but everything I learned from working with them went into creating the Chaikin Power Gauge rating. It's really the culmination of my life's work, and I'm going to share with you some of the strategies that incorporate the power gauge rating and also a proprietary way to look at relative price performance into an edge that gives you a much more successful bottom line as an options trader. So today we're going to look at 5 keys to successful options trading. Finding bullish and bearish trading candidates using the Chaikin Power Gauge rating for fundamentals and our proprietary relative strength indicator to summarize the market view of a stock. Also going to show you a very specific way to use Chaikin Money Flow, which I know many of you are familiar with because of your online brokerage platforms, to anticipate future price movements. If you're using Chaikin Money Flow, can you type a big C, please, into the chat box? And Josh, just give me a read on whether you're seeing a lot of C's.
Sure, if everybody could just use the Q&A window. Yeah, there we go. They're rolling in. Got a few coming in. Don't be shy, folks.
So Chaikin Money Flow has been on these platforms for 35 years, and they're documented and been documented in a lot of books, but we've got a very unique application, a special pattern that is really profitable. I'm going to show you some very current examples of that as well. I'm going to cover rules-based exits and entries, very critical to making money in options, to have a disciplined game plan about how you enter a trade. Also going to cover how we play good defense, avoiding landmines that can blow up your portfolio when you're building your 401k plan, and also how to turn landmines into gold mines by using these poor stocks from a fundamental point of view as put candidates. And then finally, how to find probability-based options trades. So I'd like to start by looking at the overall market because A, we get good feedback when we do this on webinars. People are concerned with the volatility and the market direction. And B, because to be a successful options trader, you really have to have some context about where the market is and where it's likely to be going. So what we've experienced here in the last 18 months is a market that was in an uptrend on autopilot all through 2017 through January 26th of 18. And that's now turned into a roller coaster of a correction. And we're going to look at the one-year chart of the SPY, the SPDR ETF that mirrors the large cap S&P 500 index. And what we see here is that very smooth uptrend in 2017 on the left-hand side of the chart, which then accelerated in what we call a French curve or hockey stick formation to an ultimate peak at the top in January 26. Now, the problem with a French curve is you know the market's going to correct, but you never know when. So it's very tempting to go short. That's dangerous. Tempting to take money off the table. That's not so bad. So what happened was, what started out as a little bit of a pullback got accelerated. It's like they poured gasoline on the fire when a specialized exchange traded note based on volatility that gave hedge funds the ability to bet on volatility blew up, and the pullback accelerated into a correction. And in a couple of slides, I'm going to show you what corrections are all about. And the goal there is to let you know that there's nothing unusual going on. So we had this very sharp pullback. During that sort of smooth uptrend, you can see Chaikin Money Flow was very strong. What did that tell us? Institutional investors who use the SPY to get instant exposure in the equity markets, just as you and I do when we want to trade the market on the upside, were pouring money into the SPY. As we experienced this correction, money was coming out. So in the first rally up in late February, early March, institutions were not buying into that. They were actually on the sidelines or doing a little bit of selling. But then we came down and made what's called a W-shaped bottom. And we're going to get into that in a way that you can really understand it and how you need to evaluate it on the next slide. Then we rallied up and we were in a very clear-cut wedge pattern with that downtrend line impeding the ability of the large cap stocks to break back out to the upside. We did that about a month ago, but we still had one hurdle, which was that high at 2741 on the SP 500 index in late April. And this week we broke above that. So we're now in a very strong pattern. And guess what? Chaikin Money Flow, which had been weak, turned strong at the beginning of May. So we've got 5.5 weeks now where institutions are coming back into the market. The pattern is very bullish, in my opinion. Money Flow is confirming it. What's also confirming it is something I look at every week when I write my weekly market letter. What are the percentage of stocks in the S&P that are above their 50-day average? Now you can see the W pattern on this chart. This is courtesy of stockcharts.com. You see the breakout, and notice that in the last 4 weeks, that number has stayed relatively high. Well, what does that mean? That means breadth is good. The market is not being driven by just a couple of stocks. And this is as of last night's close. There were 67% of the stocks in the S&P above their 50-day average. That confirms what we're seeing in Chaikin money flow and, more importantly, the price breakout. So in my opinion, we're going to challenge the old highs. We've had a long-standing target of 2850 to 3000 by year end on the S&P 500 index. But to understand what a W bottom is all about, I want to look at a 5-year chart of the SPY. It goes back to 2013. And we see a couple of patterns here. Pullbacks of between 5 and 10% typically end in the shape of the letter V. That's why you hear people on CNBC saying, buy the dips. Now, once you get a correction of more than 10% in the S&P 500 index, you almost always bottom out in the shape of the letter W. So that means you make a low. It's usually some panic sell-off that's triggered by an outside event. In this case, it was that blow up of the ETN. You rally up, then you make a lower low. That's the W bottom. Sometimes you test the old low and don't make a lower low. In 2015 and 16, we had 2 W-shaped bottoms within 6 months of each other. That's pretty unusual. But both of them led to rallies. And then again, in 2016, we got a couple of V-shaped bottoms. The last one was just before the presidential election. And then look what's missing. Between the presidential election in January of 2018, no Vs because there were no corrections. But on CNBC, there were people telling you had to sell the rally, the market was overvalued, the bull market was long in the tooth. Any reason to get on television, they'd trot out because they like to be controversial. Bottom line is, it was easy to make money in 2017 if you just let the trend be your friend. But then we had that French curve top, and now I believe we formed a W bottom. The breakout confirms that. So we're in a very bullish market climate, but let's put pullbacks into perspective. Since 1945, there have been 76 declines of between 5 and 10%. I'm adding one to this chart, which was done about a year ago. They average 6%. They typically take a month, but then within another month, you're up at new highs again. Corrections are a little more complex. There have been 27 of them, roughly one every 2.5 to 3 years. They usually average 13%. Interestingly, the intraday low at 25.33 on the S&P, 13.5%. They average 4 months in length. This one began on January 27th. We're 4 months plus in, so it's very average and ordinary what's going on. The good news is once the bottom is in, you typically return to a new high in 3 months. So we've now confirmed the upside breakout. I believe sometime between now and July earnings season, which begins around the 10th of July, maybe into August, the market will make a new high in the S&P. But what's interesting is, if we look at the performance of the various indices over the last 3 months, small caps have been winning, and the Russell 2000 has been making new all-time highs, even though the Dow and the S&P 500 have not. So what's been outperforming? The S&P small cap, the Russell 2000, even mid-cap stocks, and then the Nasdaq, driven by the FANG stocks and now some biotech. What's been doing less well over the last 3 months? The S&P 500, up only 0.25%, while the Russell has been up 5.5%, and the S&P small cap 7%. So the opportunities have been there in both large, but particularly in small caps. And this is what the Russell 2000 looks like. It's the IWM, also a very actively traded ETF, sometimes as much as 30 or 40 million shares a day. And you can see the breakout. The breakout occurred 3 weeks ago to new highs. And Chaikin money flow has been strong all the way. And small caps have been outperforming large caps. Here's our relative strength indicator. We're comparing IWM to SPY. So the action has been in the small caps. I'm going to show you some examples of that. Here's a really good example. Blucora, it's a software company in the business service group. You can see the Chaikin money flow. We're going to show you how to read the chart in about 5 minutes, but Chaikin money flow is over here. When it's all green, as we saw with the spiders, what's going on? There's intense accumulation going on. So even though this stock was in a basing phase, big accumulation going on, and we know that because Chaikin money flow stayed persistently green. And then we got a buy signal. We have 6 pairs of buy and sell signals in Chaikin Analytics. We call this an oversold buy. Extremely simple. Learn this from Larry Williams. Stock that you like, in this case, we require that the power gauge be bullish, so the fundamentals are lined up positively, sells off and makes a new 8-day low. I call that a low risk entry. These work about 2 out of 3 times. They're great for options trading and swing trading. The time duration is typically 5 to 10 trading days. And in this case, we got that signal back in April ahead of an earnings report. Positive earnings surprise, the stock gapped up and just kept running. So that's an example of an opportunity in the small cap space. We'll see a number of those as we go through the webinar. Now, the likely scenario for 2018, and it's one that we've actually been embracing since late 2016, is higher interest rates and rising earnings. This chart is courtesy of Bank of America Merrill Lynch. The most bullish scenario, which we had from 09 to 14, rising earnings and falling rates. Of course, you had to have lived through 08 to get to that point. But since 2016, particularly the second, third, and fourth quarters, we've had rising earnings and higher interest rates. Now, you heard a lot on CNBC over the last 3 months. In fact, part of the reason that we triggered the initial pullback that turned into a correction was fear of inflation and rising interest rates. Rising interest rates in a period of rising earnings are actually bullish. And the reason is they reflect higher demand for lending and a strong economy. So up to a point, higher interest rates are fine. It's not a specific level like 3% on the 10-year Treasury or 3.5 or 3.5. It's when things get overheated that you have to start worrying. We are definitely not overheating. The economy is growing, GDP at 2.5% annualized rate. Maybe we get to 3%. This is not bad. There's no inflation to speak of. It's a very bullish climate, and we want to find opportunities to trade options on the long side. And if a short opportunity comes along, we want to grab it as well. Now, if after all this analysis, you're still bearish and thinking there's going to be a pullback, here's a great way to play it. I love vertical put and call spreads. They're known as debit spreads. They cost you money, but they limit your risk. And in this case, if you're bearish on the large caps, because the S&P hasn't been able to make a new high, and you think by July 20th that the S&P is going to pull back 4+%, you can buy the 278 put. I pulled this from our Options Play Ideas module, which is embedded into Chaikin Analytics. Buy the 278 put with a July 20th expiration. And to reduce the cost from $411, which is the idea right in the middle, suggested by Options Play, you sell the 269 put against it. That brings your cost down dramatically from $411 if you bought the put outright to $243. That's why it gets a big green circle around the 153 and a check mark. And you can make about 275% if the S&P sells down to 269 by July 20th. Contrast that to what you make in the put, you make a lot less. So if all we're going to get is a pullback of 3 to 5%, this vertical bearish put spread is a great way to play it. I love these strategies because they're high probability relative to just buying the option outright. Now, Price has a wonderful strategy that he shared with the Chaikin community about out-of-the-money puts on stocks that meet very rigid technical pattern that he's developed. That's a different ballgame. You've got an expert finding it. If you're just looking to bet on the downside, this is a great way to do it. Now, during the course of this webinar, we're going to show you how to find stocks like Blucora in the small cap space, and then large cap stocks like Centene, which is killing it in the Medicaid business. It's the premier company in Medicaid. They're making an acquisition to make them even more prominent. And more importantly, they figured out how to make money in a very volatile healthcare environment. They raised their rates last year in anticipation that government funding might be cut back. And so there's a buy signal. We call this our relative strength buy. I'll get into that in a little bit, but this is an example of a large cap stock that's making new highs. We've been bullish on this stock in the power gauge methodology for over a year. And in the left-hand corner is an example of something that good traders should always be doing. Keep a diary, or in this case, create a note on the screen. It's a new piece of functionality at Chaikin Analytics. Make some notes about what you're seeing if you're following a stock like Centene. In this case, there was an article back in February that it was a rumor takeover candidate along with Humana, so I started watching it. It sold off in late March with the market, and then it gave a relative strength buy signal, and I'll explain that in a couple of minutes. So every time I bring up the chart, I can bring up that note, update it if I want to, but the bottom line is we're going to show you how to find stocks like Blucora and Centene, and then you can, the option strategies are actually easy. People overcomplicate things. If you know what stocks you want to trade from the long and the short side, you can click on that options button and bring up that options play module, and the strategy becomes very easy. Don't overcomplicate things as an options trader. Now, there's so much information. We've reviewed some of it here. It's called information overload, and it really is difficult to trade if you're trying to process technical, fundamental, option strategies, Greeks, all these various inputs that you need to know about to trade successfully. So to basically cure information overload, the antidote for us is Chaikin Analytics. It's the solution to information overloads for both iPad and desktop. And now we're going to show you very specific ways to use the patterns that we've developed, the combined fundamentals and technicals. So fundamentals drive the market, but emotions drive the market to extremes. So for me, the path to profits has always been combining fundamentals with technicals in a disciplined way. I want the fundamentals to support my ultimate decision. I want the technicals to confirm it. So the Chaikin Power Gauge gives you the edge you need to trade profitably. We call it the directional edge. This is what I learned when I ran the options department at Tucker Anthony with over 25 branches, tens of thousands of options clients. 95% of them lost money. And the reason is they didn't understand the importance of having a directional edge. Now, back then, in the early 80s, the directional edge was, for me, was technical analysis. Now we combine technicals with fundamentals into a quantitative model called the Chaikin Power Gauge, and then zero in on buy and sell signals for better entries and exits. Now you can follow prices, buy signals, which are great, candlestick patterns and so forth. We've provided disciplined buy and sell signals, and we'll share some of those with you. And by the way, they're on our website. So whether you're a member of the Chaikin community or just a visitor, you go to the website, and the rationale behind the 6 pairs of buy and sell signals is there. So what is the Chaikin Power Gauge? Well, at its heart, it's a very simple display that goes from very bearish to very bullish, but it's a very powerful display because there's a lot of number crunching going on under the surface. I like to say that the Chaikin Power Gauge rating is like a Chevrolet with a Ferrari engine under the hood. And as we'll see, it can be your GPS during earnings season. Now, Price was kind enough to give us this ringing endorsement. Wow, thanks for sharing so much. Your clean and simple red-green power gauge ratings, which find the best stocks with the best fundamentals, makes trading easy. And he loves the fact that it combines fundamentals with technicals because he's got both the chartered financial analyst and the chartered market technician accreditation. So he knows from where he speaks, and thank you for that, Price. Now, what is the Chaikin Power Gauge rating composed of? Well, it's 4 primary factors that cover value, growth, technicals, and sentiment. And within each of those are 5 sub-factors. Now, why does the model work? Well, first of all, we locked it down in September of 2010, which means the factors are the same and the weightings are the same, because the weightings are important. So value metrics are 35% of the model. This is what a Warren Buffett looks at. Price to sales ratio. You don't want to pay too much for a dollar of revenue. Free cash flow to market cap. You can doctor up earnings with accounting techniques, but you can't doctor up cash flow. Cash flow is cash flow. You either have it or you don't at the end of the year. We then look at some growth factors. Some of them are pretty simple, and you probably know about them, like earnings trend and PE ratios projected. Earnings surprise is very, very powerful. I've been using it since 1966, 67, when it was published as a weekly paper publication by Standard & Poor's. How does a company stack up when they report quarterly earnings versus Wall Street estimates? Now, there was a great story this morning on how Jamie Dimon, head of JP Morgan, and Warren Buffett are trying to convince companies to not issue quarterly earnings reports. A, it's never going to happen. And B, it would be a shame because we take advantage of earnings surprises and the resulting analyst reaction to them. Analysts raise or lower their estimates when a company disappoints or surprises to the upside. And that's why they're two very important factors in the power gauge. And then when you combine that with industry group relative strength, we really have a unique model. It works, and it's worked since January 2011 because it's based on how Wall Street works. Big, successful institutional investors look at these factors every day before they make buy and sell decisions. Now, the interesting thing is they all have different styles and time horizons, so they don't all look at each of these factors. That's what makes the Chaikin Power Gauge rating special. It's an eclectic model that finds a lot of different ways to like or dislike a stock. It can like large cap or small cap. It can like healthcare or technology. It can like wherever it sees opportunity by reflecting it in a bullish power gauge rating. Now, the performance of the power gauge has been pretty impressive. This chart combines the back-tested results, which are always good, that ended on January 1st of 2011 with the real-time results. So we have more than 7 years of real-time results. In the Russell 3000 universe, the very bullish power gauge rated stocks up 20% on average since 1999. Even after a 9-year bull market, the average very bearish stock is up only 1%. So that's a big spread between 1% and 20%. And that's what we try and capture in the strategies that we develop with Chaikin Analytics and our members. In 2015, it was really important to know which stocks were very bearish because the very bearish stocks in the Russell were down over 17%. These were the fracking stocks: Kinder Morgan, Range Resources, Pioneer Resources, the rails. Small caps in general were in a bear market. So if you could avoid those stocks on the long side or go short them or buy bearish put spreads and focus on the stocks with bullish ratings, you survived 2015. If you were on the wrong side of Kinder Morgan, and another example that we're going to show you in a little bit of a quiz that we're going to do, you avoided some real pain because many of these stocks were down 60 and 75%. Now, one final proof point, as Price mentioned, 4 years ago, we launched 4 Nasdaq Chaikin indices. They have 4.5 years of real time. They're rules-based indices that are rebalanced just once a year. So we have always been telling our potential members and our members every week that the Chaikin Power Gauge works going out 1 to 6 months. So it's great for swing trading, for intermediate term investing, for options trading. These 3 Nasdaq Chaikin indices are buy and hold portfolios. They last for a year. So they've proven that there's a longer time horizon that the power gauge captures. And because they did so well, New York Life Insurance, the largest mutual insurance company in America, and their investment subsidiary, Index IQ, licensed all 3. And in May a year ago, they launched the small cap CSML, now has over 500 million in assets. The large cap was introduced in December of 2017, less than 6 months ago. It's got 450 million. So there's almost $1 billion in rules-based portfolios that are created where the final decider is whether the Chaikin power gauge rating is bullish or not. Very proud of it. We rang the opening bell on Nasdaq a month ago, and then the Chaikin power gauge was up there in lights on Times Square. It really is, it brought tears to my eyes, and it's a great testimony to the 26 people in Philadelphia who support our members every day. So it's just another endorsement. Now, why is that important? Well, A, there's, as Price said, there's real money behind the power gauge rating, and B, you're giving us an hour of your time. I want you to believe that there is a way to analyze fundamentals and bring them into your trading in a methodical way without spending the rest of your life chained to a desk going through website after website. So we've created a disciplined methodology that incorporates the power gauge, and it's all on this pyramid. Volatile markets demand a disciplined methodology. Otherwise, you get whipsawed by the headlines and the news and the talking heads on CNBC. So at the top of the pyramid, Chaikin power gauge rating. Industry group strength is also very important. That's why it's one of the factors in the model. Bottom of the pyramid, just two technical indicators: Chaikin money flow to measure institutional buying and selling, and Chaikin relative strength, where we've looked back over 6 months and converted the indicator that many of you use into a heat map. And you'll see how easy it is to spot changes in relative strength. Right in the middle of that sweet spot are 6 buy and sell signals. Now, we have a pattern that we call classic Chaikin bulls. This is the way we find potential options trades on the long side. Just 3 elements to it. Power gauge is bullish, which tells us that the fundamentals are strong. Stock is outperforming the market. And Chaikin money flow is strong, telling us that institutions are accumulating the stock. So our poster child for the last 6 months has been E-Trade. Many of you trade on their platform. The stock has done extremely well. We read the chart from the bottom up. Before we get to price, we want to look at the Chaikin power gauge rating. In the case of E-Trade, it's been bullish for the last 12 months. Then we look at our relative strength indicator, which is green and has been for 11 months. That tells us E-Trade is outperforming the market, so the market agrees with the model. This is really important because no matter how good your fundamental research is, if the market disagrees with you, guess who wins? My old friend Marty Zweig, sadly passed away too young, said, "Mr. Market is always right." And then finally, we look at Chaikin money flow to see if the institutions are accumulating the stock, and they were. Now we look at the price chart. Now we're looking for entry points. In this case, it's our money flow buy. Power gauge is bullish. Chaikin money flow is green. The stock drops under an 8-day exponential average and rises back above it. And it's above its 21-day average. It's a really simple but disciplined pattern. Again, 5 to 10 days, about 2 out of 3 of these entry points are profitable. So you have to cut your losses when they're not, but you can see on the chart how lovely it would have been to buy E-Trade on each of these signals. Now, it's one thing to know that there's a good pattern out there, which is what we call our classic Chaikin bull, but how do you find them? Well, we've created a screener within Chaikin Analytics that goes way beyond the conventional screener that you'll find on FinViz or on one of the websites like Yahoo Finance. We enable you to screen on the power gauge so you can harness the predictive value of the power gauge rating in the fundamental area and any of the 20 factors or components. So in this screen, which I did back in April for a webinar, I started with the S&P 500. Why? Because small caps hadn't yet exploded, and in volatile times, I want to go with quality. I then required the power gauge be bullish, and because free cash flow is so important, I wanted it to be strong, and then I got to the technical factors: rising long-term trend, outperforming the market. That reduced the S&P 500 down to 16 candidates, including E-Trade at 56 on the way to 65. Marathon Petroleum, 73, went to 83 before it pulled back. Micron went from 49 to 63 before it had a sharp pullback. Macys at 30, trading at 41 today. This is just in a month and a half. So a very powerful way to narrow the universe down and focus on just those stocks that meet the right criteria. Now, the classic Chaikin bear, as we said in 2015, really important to know which stocks had negative fundamentals. So bearish power gauge rating to measure the fundamental weakness, underperforming the market, Chaikin money flow red, not green, telling us that institutions are selling the stock. So again, we read the chart from the bottom up. Power gauge rating is red on Tesoro, which is a biotech and drug stock, for over a year. Stock started out a year ago at 140, trading closer to $40 in the middle of a bull market. Then we look at our relative strength indicator. It's red, so we know that the stock is underperforming the market. The market agrees with the model, so we're looking for short sale opportunities. And we see institutions are selling the stock. So we want to find any excuse in the world to get short, to put on a vertical put spread. Certainly don't want it in our 401k plan. And we see at the top of the screen, the trends are analyzed for you. They're weak. The industry group is weak. This is a stock to avoid. Now, we've broken down the patterns that we can identify to give you 3 other patterns: dynamic duo, personality changes, and that special way to look at Chaikin money flow to find these stealth accumulation and distribution patterns. So what is the dynamic duo? Well, it's what we've been talking about now for 30 minutes. Combination of fundamentals and technicals. Chaikin power gauge rating to let you know if the fundamental potential is strong or weak, and Chaikin relative strength to see if the market's confirming that. It finds big winners and losers. But as we'll see in a few minutes, relative strength actually stands alone as a bullish or a bearish indicator. Now, what do we mean by that? Well, we all know about momentum stocks. You had 3D printing stocks in 12 and 13. You had fracking stocks in 14. You had cloud computing stocks, stocks like Tesla and Amazon. Momentum stocks, sometimes the fundamentals confirm, very often they don't. So when momentum turns against you, you're on a high wire without a safety net. But when everything is going up, these stocks are wonderful trading candidates. Just be aware, you need close stops and you need some good money management, because relative strength can get you only so far if the fundamentals don't confirm it. So what is a bearish personality change? We define it as a stock that's been outperforming the market that starts to underperform, or vice versa. So here's an example of a bullish personality change. This is a 1-year chart from Chaikin Analytics on Michael Kors. Back in June and July and August of 2017, the stock was in a downtrend. It was languishing, and then they reported a positive earnings surprise. Remember how we said earnings surprises are really important. I'd hate to see companies stop reporting earnings on a quarterly basis, because when we get a positive earnings surprise, and there's been a series of them, we expect that they'll continue. Now, the stock spiked up. Power gauge was already bullish, but it was sort of flat and not a great buy candidate. But when it spiked up on that positive earnings surprise back in August a year ago, started outperforming the market. Do we want to buy that spike? Absolutely not. 70% of the time, that's a losing bet. What we want to do is look for the first buy signal after the spike, and then find a good option strategy or trade it as a swing trading candidate. So about 8 days after that spike up, we got our oversold buy signal, a new 8-day low in a stock with a bullish rating. And there's our first entry. Along the way, we get additional entries. We also get additional positive earnings surprises. There's never just one of them. They come in bunches. I learned this from a colleague at Drexel Burnham in the mid-'80s. And even after a huge spike down here about 8 days ago, when Michael Kors reported a positive earnings surprise, this earnings season was a real challenge for traders. I'm sure you're aware of that, because you got a lot of selling on the news. Even when companies reported good earnings, traders took their profits. They reported bad earnings, they got punished. In this case, Michael Kors dropped 13% on a good earnings report. That can happen. The previous earnings report, the stock actually spiked up just as the market was peaking, and that was a great selling opportunity. But in this case, you've rebuilt and the stock is up and fundamentals are great. But the key here is spot that bullish personality change and then be looking for buying opportunities. Now, here's an example of Macys, which is a more recent bullish personality change. And this chart shows you what most traders are looking at. This is from stockcharts.com. We do webinars for them. It's a very powerful technical platform. And using their scooter indicator, you can spot personality changes. And you can see Chaikin money flow and the long-term moving averages. What you don't have is the additional fundamental information. So here's Macys on the Chaikin platform. Power gauge rating at the bottom is now bullish in the main. You had a bullish personality change right at the end of November, telling you that the stock had broken out of that long-term basing phase. And then you look for that first buy signal. So the bullish personality change came with Macys at about 24. That first buy signal came at about 25. And now today you're trading at 41. But by being disciplined and waiting for that first buy signal, you got confirmation that there was a low risk entry point, and there have been a series of these trades. Now, this is what we call our relative strength buy signal. This is the most powerful pattern for swing trading and for options trading I've ever seen. Very simple. Power gauge rating doesn't come into play, it just enhances it. Stock is outperforming the market, so look at that relative strength indicator. Comes down under its 21-day average and then moves back above it. That's what triggers the relative strength buy signal. Why I like this signal so much is that the signal has a duration of 4 to 8 weeks. So you can buy a 20 delta option, or you can buy a 70 delta option. You can be in the money, you can be out of the money, knowing that you can ride out some shorter term swings and maximize your potential in a 4 to 8 week move. We see actually 4 of these signals in the right side of the chart because relative strength was bullish. Typically, the signal works 70% of the time. Notice on the left side of the chart that when the stock was underperforming the market, the relative strength sell signals worked on the downside until it's had a personality change. So very powerful technique. You can spot it on something like stock charts, or you can use this integrated approach on Chaikin where you see the earnings reports and whether they surprise to the upside, get the options, strategies, and so forth. That's why I say early on that this is the antidote to information overload. Everything you need to know to make a decision on a stock is on this chart. Now, here's an example of a bearish personality change. Philip Morris, consumer staples, been a terrible sector. Tobacco's been a terrible group. You had that bearish personality change in August 2017, a series of overbought sell signals when the stock made a new 8-day high. Remember, they only work 2 out of 3 times. The most recent one came just ahead of an earnings report. Notice you had had a series of negative earnings surprises. How do we know that? The EPS icon is colored red, not green. And my colleague Dan Russo, who's a great market technician, heads the New York chapter of the Chartered Market Technicians, is our chief market strategist. He made Philip Morris a bearish stock of the day based on that overbought sell signal. Company disappointed, and it dropped from 100 all the way down to 80, with institutions continuing to sell the stock. That's why it's so important to know about a bearish personality change. People went into Philip Morris because of the yield, just like they went into Kinder Morgan in 2014 and 15 with the stock at 42 and ultimately dropped down to $10 or $12. So you got to be careful when the tide turns that you know and you're in the right direction. Now, here's the most important pattern in the whole webinar. We call it the secret sell signal that 95% of traders never see, and we've been teaching it to institutional investors for over 30 years. We call it the Chaikin bearish money flow sell alert. So here we're looking at a chart on Advanced Auto Parts. It ends in 2017, and in January of 2017, Advanced Auto Parts equaled its previous peak near that upper volatility band. Chaikin money flow should have gone green or positive. Instead, it stayed negative. It told us that smart money was selling the stock. Excuse me 1 second while I clear my throat. If smart money is selling the stock, you want to be selling it as well. Now that came with the stock at 170. Then you had a bearish personality change, institutions selling all the way down. Chaikin power gauge turned bearish again. Now we're looking for selling opportunities. And those relative strength sell signals, look how wonderful they are. 4 to 8 weeks to the downside. Negative earnings surprises, gap down, great put buying opportunities. This chart ended with the stock trading at 95. The ultimate low was 78.87 in November of 2017. Now, I'm going to give you the complete example. I want you to look over my shoulder because I recommended a stock called DR Horton in the home building group back on September 24th of 17 as my bullish stock of the week in my weekly market insights. Stock was 36.90. Now, why did I recommend it? Again, we read the chart from the bottom up. Power gauge rating was bullish. That said the fundamentals for DR Horton, which provides and builds homes for first-time home builders, and millennials are getting out of their parents' basements and buying houses, so that's powerful. Was outperforming the market, and Chaikin money flow told me that the institutions were buying. There had been 2 oversold buy signals, and when it pulled back to the 21-day average here in September, I liked it. It screened well, came up on my classic bull screen, and I made it my bullish stock of the week. It was 36.90. You can see that it went in almost a straight line for 2.5 months, all the way up to 52.5. Now, for the bulk of that move, what were the institutions doing? They were continuing to buy the stock. And then finally in December of 2017, in early January of 18, the stock made a new high, and look at Chaikin money flow. Just as with advanced auto parts, smart money was selling. We don't know why they were selling, and we don't care. We just know that this pattern is so predictive. So if you were still long the stock, as my wife Sandy was, who trades this very simple methodology, you get out and you ignore the next buy signal. Now, why do you ignore the next buy signal? Well, A, we told you that only 2 out of 3 signals work. And B, if the institutions are selling and getting out, you don't want to buy into that selling wave. And even though the fundamentals for the home builders are positive, you've had now 6 months of underperformance. Relative strength has gone negative, so there have been some relative strength sell signals, and it's been a group to avoid. So what was a wonderful trade on the long side turned into a liability if you didn't recognize that personality change. But more importantly, the bearish money flow sell alert gave you an exit right at the peak. Now, it can also put you into a trade. I would not have shorted DR Horton or bought a put back there. I just would have gotten out of a long position. Why? Because the power gauge was still bullish and it was still outperforming the market. But there's another pattern that complements this bearish money flow sell alert, and we call it a mini bearish money flow sell alert. Here's a company called Trimble. It's in the electronics area. Power gauge has been bearish, underperforming the market. What have the institutions been doing? Well, if you have learned this technique, you know that they're selling the stock. So in this case, it's in a downtrend, not making new highs at the upper volatility band, but it's getting overbought. And when it gets overbought, we get our overbought sell signal on a new 8-day high. And if money flow is negative, that's a mini money flow sell alert. That's tradable. And in fact, Dan Russo made it his bearish stock of the week back here in late February. I made it my bearish stock of the week on that rally in April, all based on this overbought sell signal. And then when they had a disappointing earnings report back in late April, the stock spiked down to the lower volatility band. Now you cover your trades. Let those spikes in the volatility be your friend. That's a great place to exit. Implied volatility goes up. Option premium goes up. If you're in a put spread, it's a great time to get out. And the trade's over. So mini money flow sell alerts are tradable. Money flow sell alerts are a great place to exit a trade. Now, everything we've been talking about is what Warren Buffett calls the fat pitch. He's famously said that they don't call balls and strikes on Wall Street, so you don't have to swing at every pitch. You can wait for your pitch. He calls it the fat pitch. We call it the ideal setup. Tuesday night, Price shared with the Chaikin community his ideal setup, and it's powerful for buying out of the money options with stocks that are ready to explode. So what's missing from this ideal setup? Well, it's those buy and sell signals. So once you have the ideal setup, power gauge bullish, outperforming the market, institutions buying, so Chaikin money flow is green, you're looking for a buy signal. Now, just as with the classic bull pattern, it's nice to know that there are 6 pairs of signals that work on a high probability basis, but how do you find them? So in Chaikin Analytics for iPad and desktop, we have our dashboard alerts on any list, ETF, index, industry group in the system. You can create unlimited lists. In this case, back on April 5th, in a list that I follow, about 35 names, Marathon Petroleum, where I love the fundamental story, and so did the power gauge, gave a money flow buy signal at 72.60. The yellow arrow shows you where that buy signal came in, and the stock went right from 72.60 to $83, almost in a straight line. Power gauge was bullish, relative strength was strong, you got the signal. Trading on disciplined signals is the key to profitability in the options market, because anytime you trade with discipline based on proven patterns, it's better than trading on your emotions. So we love trading the signals. Now, we recently introduced a new feature to Chaikin Analytics that's really powerful. It was introduced on May 7th. They're daily email alerts on the main list that you follow. In this case, I follow 35 stocks and any index. So I usually pick the S&P 500. So the second day this service was rolled out, I got 2 signals on one of the 35 stocks I monitor, Envision Health, oversold buy at 36.90, and then an alert that they had reported a positive earnings surprise. Again, earnings surprise is really powerful because analysts start to get excited about the stock. So what did EVHC do? Well, A, it opened at 37.90, up 40 cents. But if you had bought that opening, you saw the stock trade up to 43 within 3 days because takeover rumors resurfaced on the stock. So that's an example of an alert that's actionable, leading to a very profitable trade. Now, 2 days ago, we're talking a month later, same 35 stock list, Akamai, that I absolutely love, talked about on Jim Cramer's Off the Chart segment about 2 weeks ago, gave a money flow buy. 77.07, could have bought it, it traded up to 79, pulled back a little. This is a company that helps businesses deliver content. They've announced a joint venture with Mitsubishi Bank to do a blockchain-based electronic payment system. There's some real sizzle now on an already good company. Cramer loves it. Our power gauge rating is bullish. How do you know that? Because right to the left of the symbol, it shows you the power gauge as an icon, and you see the money flow buy. And this is how you make money trading options, by zeroing in on opportunities without having to pour through reams of data. Now, I want to show you how to make money swing trading using options in volatile markets. So volatility plus fear equals opportunity. We want to follow the power gauge ratings, make sure the industry group supports the trade. In this case, we want to favor small caps because the IWM is outperforming the S&P, and we want to have a rules-based entry. So here's Valero Energy, very similar to Marathon Petroleum. Power gauge has been bullish since November, outperforming the market. You can see that bullish personality change back in August. Big institutional accumulation. Dan Russo, again, recommended the stock on this pullback here after these two relative strength buy signals as his bullish stock of the day in his morning insights. And the stock took off, went from 90 to 120. This is not uncommon. This happens over and over and over again. Institutions are still buying it. It recently made a new high. We're looking for a pullback as another entry point. Now, small cap opportunities are out there. Here's Fossil Group. They make watches for different branded designers. And the stock's been in a terrible basing phase with lots of selling pressure from the institutions. Then they reported a positive earnings surprise. Again, you got a big spike up in February. Do we buy the spike? No, we wait for that first buy signal. Relative strength buy signal here with the stock at about 12, 4 to 8 week time horizon, as we said, another positive earnings surprise, and the stock spiked up all the way to 26, trading at 28 this morning. So relative strength buy signal came in at about 12.50. Very disciplined approach, wonderful trade. Crocs, probably a shoe brand that you know very well, and the very strong apparel group. Power Gauge has been bullish in the main for the last year, outperforming the market. Again, we read the chart from the bottom up. And here's a buy signal. This is a money flow buy in a nice small cap name and a strong industry group. You buy the stock at about 15.50, trading at 18.50 today, about 3 weeks later. Very disciplined approach. And you can find these using the screener and our alerts capability. So I'd like to end the webinar by looking at how you play good defense. The Eagles, bless their hearts, won the Super Bowl. They did it by playing good defense. Yeah, there was a Hail Mary trick play, but good defense is the reason the Eagles won the Super Bowl, and that's typical in the NFL. Good defense leads to good offense. So how do you play good defense? Well, Herb Greenberg, who's one of the smartest analysts on Wall Street, writes for TheStreet.com and for CNBC, is now advising hedge funds on short sales. In January of 14, he said it's the stocks you don't own that matter. Big article. What did he mean by that? Well, what he really meant was we spend so much of our time trying to find the next big winner, the next big Facebook or Tesla, when the real key to making and keeping money is to avoid stocks in weak industry groups, to know what stocks not to buy, and don't bottom fish. And I'm going to show you a fun example of that. To know that you can improve performance by eliminating bearish rated stocks from your 401k plan and only trading bullish rated stocks on the upside. Spot bearish personality change. You now know how to do it. You can do it on Chaikin. You can do it in stock charts. And buy bearish put spreads on weak stocks. That's how you play good defense. So let's look at an example of a stock you didn't want to own over the last 6 months. Ambarella semiconductor stock was a big momentum favorite. And remember I said when a momentum favorite turns sour, and by the way, look at this institutional selling when the stock was making new highs up here. Another example of a bearish money flow sell alert with the stock around 64.5. More recently, again, Dan Russo, bless his heart, made Ambarella his bearish stock of the week on that overbought sell signal with the stock trading at 55. Bearish earnings surprise 2 days ago. The stock spiked down to 42 and he took the trade off, covered the short sale. Great bearish vertical put buying opportunity there just 2.5 weeks ago. Power Gauge was bearish, underperforming the market. You get the signal, that's your entry point. You exit on that negative earnings surprise and the big spike down. Now, I was quoted when I spoke at a Jim Cramer live teach-in, and then subsequently Street.com picked it up, as saying that bottom fishing is the most expensive sport in America. It always feels good to call the bottom, but 8 out of 10 times, it's not the real bottom. So at the bottom of this chart, I've taken the technical indicators from a very popular stock. And again, reading the chart from the bottom up, and this chart goes back to June of 17, what would your take be on the stock? Power gauge is bearish, underperforming the market, big institutional selling, then you get some buying. A lot of bottom fishing was going on in Under Armour. Steph Curry signed a big contract, 156 million. People use that as a reason to get bullish. And on CNBC, when the stock was down around 2021, you heard a lot of commentators saying the selling is overdone. The company's a great company. They're competing well with Nike. Well, nobody realized that Adidas was going to eat everybody's lunch in the sneaker business. The power gauge was bearish for almost a year, starting with the stock at 42, underperforming the market, institutions selling for almost 8 months, and you want to be selling along with them. So you do not want to be bottom fishing with the power gauge bearish and the stock at 21.16 in June of 2017 because the ultimate low was $12. You never know where the low is. Now back here in late February, you had a bullish personality change. That's why it's so important. It came on a positive reaction to an earnings report. And subsequent to that, all the relative strength buy signals have been working. And just recently, you spiked up to 24, and I heard people on CNBC saying, oh, this company's turned around. Everything is great. Well, we knew that a long time ago because we got a bullish personality change. And again, you wait for the first buy signal. You do not buy that spike up. You wait for a disciplined entry. In this case, the relative strength buy signal. Remember, 4 to 8 week time horizon. You had 2 of them. Look how the relative strength sell signals worked on the downside in Under Armour, and now they're working on the upside, even though the power gauge is neutral. So this is an example of relative strength standing on its own as a bullish indicator. What we talked about early on in the webinar. Now, we're going to end the webinar with a potential idea. I am not fond of Tesla from a fundamental point of view. Market cap is way too high. Elon Musk is constantly hyping the stock, and the power gauge has been bearish. But the only way to make money on the short side is to put on a bearish position in Tesla on strength. And we got that opportunity this morning. Came in today, and there was a relative strength sell signal. In this case, it was an overbought sell signal, had been relative strength sell signals, because Tesla's had 2 days of really good news. A, they say they're going to build a plant in China, and B, Bernstein, a very fine research firm, has said that the stock is going to benefit from some new model introductions. So you've got the stock rallying from 275 all the way up to 325 this morning. And I said, well, I want to show people on the webinar a potential put trade. If they agree that Tesla is overpriced, do I want to buy the put for $1,950? This is the 325 put, which was slightly in the money, expiring on July 20th. No, I'd rather do the vertical put spread that we described with the SPY. Buy the 325 put, sell the 275 put against it, reduce your cost from 1940 to 1525 so that if the stock drops back to 275 where it was 3 weeks ago, you have a nice risk reward ratio. And options play finds those spread for you. Now, it also likes shorting the stock just based on a probability basis. But the fact is the power gauge has been bearish. The stock has rallied up 50 points. If you want to short Tesla, this is when you do it. It's not that easy to short stocks when they've rallied 50 points. The only way you can make money shorting Tesla. So Chaikin Analytics gotten a lot of press. We also won the Benziga FinTech Award last May for Best Ideas Platform, competing with 19 other apps. And this year we got the Best in Show Award at Benziga. So it's a platform that can help generate profitable ideas. It's called Chaikin Analytics. It's a proven stock selection system. It incorporates our 20-factor model, the power gauge rating, but also our stock discovery engine. Just like Netflix finds you movies based on what you've been looking at and you like, and Spotify finds you music, our stock discovery engine, which is what we won the FinTech Award for Best Ideas Platform, will take a stock that you like and find stocks that are similar to that. So if you like Bluecora, you type in BCOR, you'll find 5 software business service stocks like that. It's a relevance-based matching engine, really powerful. We hear a lot about AI in the stock market. This is real-world intelligence, not artificial. It's based on the power gauge, the industry group strength, the technicals, the earnings picture. It's a powerful idea generator. In addition, you get the screener that you've seen and our options play ideas module, which makes finding strategies in the 2000 optionable stocks easy. So you don't have to get into the Greeks, just like Price with his patterns helps you zero in on the right options play for the stocks that Price isn't recommending, finds the right strategy for you. Chaikin Analytics is normally $2,195 for an annual subscription. You can go to chaikinanalytics.com/expert and subscribe and become a member of the Chaikin Analytics community. But as a webinar special to the Big Trends community that Price has so kindly turned out for us, we'd like to take $200 off, reducing the cost of an annual subscription to $1,995. Again, chaikinanalytics.com/expert. And this offer is good until Sunday, June 10th. Now, Jim Cramer has said that the Chaikin Analytics model is the best. Use it at my old hedge fund. We did that live webinar teach-in New York City with Jim, and he live tweeted that slide about the Chaikin power gauge that we went into detail for you on today's webinar. That was a $300 live teach-in event. Now, in addition, you get our intraday charts, our earnings alerts, and my weekly market insights, where we recommended DR Horton back in September. Plus, as a member of the Chaikin community, you get access to our weekly strategy webinar with Dan Russo, our market strategist, and Josh Midland. Unlimited coaching, including one-on-one coaching if you need it, plus Dan Russo's daily morning insights, where those recommendations on Philip Morris and some of the other stocks like Valero that we showed in the webinar come. Now, as a special inducement to get you on board, a member of the Chaikin community, because this really is a powerful tool, we'd like to offer a special fast action bonus. If you subscribe by midnight tonight, we'll take an additional $200 off the cost, reducing an annual subscription to $1,795. And for the first 10 people who subscribe tonight, you'll get a one-on-one phone session with me. They typically last an hour to 40 minutes. I enjoy them. People get a lot out of them. And it's our way of saying thank you to Price for really sharing what we have to teach with the Chaikin community and being such a wonderful partner and friend. So Price, do you have any final thoughts for the folks out there?
Mark, just a phenomenal presentation. I mean, there's so many levels of value here, folks. I mean, I guess what strikes me is that, what I love that Mark does is that he incorporates, it's not just price action and technicals, he's incorporating the fundamentals when it comes to earning surprises. I happen to believe with Mark that the earning surprises are the most important fundamental out there. And so as he showed you, you might get an earnings pop up, but then his software shows you where to get a good risk reward entry point. And that's so important. A lot of people just chase. And I love how you can see with those green and red arrows where you get good risk reward trades. And so, I love too that Mark's not shy about telling you Tesla's one that's looking bearish here and gave a bear signal. So, you see how many ideas you can generate, all the other support you get. I can't believe, Mark, you're even offering one-to-one coaching with you. What an amazing opportunity with a 50-plus year Wall Street veteran like yourself. When I got into trading, fresh out of Duke University, I started reading about your work and the various. I was looking at bands and all kind of the various accumulation distribution work you've done that really shows that institutional money flow. And I'm honored that that's just be your friend and your big time supporter to say, look, this is powerful stuff, folks. You have the opportunity now to interact with Mark directly. Any questions you have, start putting your fingertips. We're talking about, think about how much money you can make on a good trade in your portfolio. and also if you're on the wrong side, how much it can cost you. I'm always talking about the 80-20 rule, where you get the best of the best trades really drive most of your performance. In the same way, your poorest trades will drag you down very quickly if you're not careful. That's basically what the Chaikin Analytics platform and software does for you with the Power Gauge and all the other tools, is it gets you pointed towards those names that have the best patterns, the best likelihood of success. There are no guarantees in trading. There's going to be losing trades, but Mark's showing you where you can have good low risk entries, pop them out quickly if they don't hold, and then if they're working, the Power Gauge and other tools will show you how to stay with those big trends to the upside, and as he showed you with Under Armour and more, to the downside. So I'm just so thankful, Mark, for the value you're giving here to our Big Trends community, and I always learn from you as it relates to, okay, what's important to look at? Because there's so much noise out there. There's so much stuff that most traders and investors are getting distracted by. Your software gives a tool to actually really focus, including the daily idea generation. And it's not just like giving people software and then, hey, you're on your own. It's like, no, you've got all the support, folks. You've got the daily idea flow. You've got all kinds of things to look at and continue learning. And that's the other thing that I love about your package here, Mark, is that it really promotes continuous learning. I'm always preaching, no matter what level of education you had in formal academic education, you have to constantly be educating yourself and opening your eyes to what's happening in the markets, because the markets are constantly adapting. And so Chaikin Analytics, powerful software here, gives you that ability to keep learning for life, so that he's not just giving you a trade, he's helping teach you how to trade and invest in the right kind of names up and down. So I don't want to continue to gush, but basically bottom line is you can see I'm a huge fan of what Mark has to offer, and his Chaikin Analytics team is just so impressive. So I want to say thank you, Mark, for just a great job sharing so much and laying it on the line, which I love. It's you're using current examples and stuff that's fresh, and that's what you're going to get, folks, is really fresh idea generation every day and lots of opportunities flowing. So again, to take advantage of this, make sure you go onto that page, or as I know in the chat, posting the link to get started with that, or give Mark and his team a call if you have any questions there. You can see the number to reach them. And at the top right, you can see it there, 877-978-6257. So again, thank you, Mark. It's always a pleasure to learn from you and to develop the relationship that we've developed. And I look forward to many more opportunities to come. And folks, you're going to have many opportunities every day when you take advantage of this offer at this phenomenal savings with the one-to-one coaching opportunity with Mark that frankly you just don't get from such an esteemed Wall Street veteran. So thank you for offering that too, Mark. I guess with that, I will hand it back over to Josh so he can wrap up, tell you anything else you all need to do to take advantage of this and act quickly before this all these savings and bonuses expire here over the weekend. So back to you, Josh.
Thank you, Price. Thank you, Mark. Thank you, everybody, for attending today. In the chat window, you can access the link in order to take advantage of the offer. The offer discount will automatically be applied, and you have an opportunity to get a one-on-one with a living Wall Street legend. So please take advantage of that, and you can sign up again by clicking on the link, chaikinanalytics.com/expert, sitting in our chat window now, or you can give us a call, 877-978-6257. We can get you onto one of our onboard sessions tomorrow. We run them every week. We've got a great team here that's ready to support you. We run option sessions as well regularly for ideas. So please join us, and I look forward to seeing you in a future session. Thank you all, and good night.